The JSE ended off the day 1/3% in the green rather, with gains across most of the local bourse, and that was largely in line with what we're seeing globally as market participants look to see what's going to happen between the US and China as they begin their talks this week. But David Shapiro from Sasfin Securities joins us this afternoon to unpack this and other stories in business. A very good afternoon to you, David, and as always, thank you very much for joining us. Let's start with the way that the JSE started off the week in the green. European markets were also in the green today. I mentioned the talks between China and the United States, but what are some of the other big movers for the day?
Well, I think the backdrop to stronger markets is the view that we've come to the end of rate hikes. And no matter how we look at it now, the conversation is turning towards when will the Fed start to reduce rates. I think that's become the big driver. I think we've also, to a large extent, discounted what's happening in the Middle East and really focusing on where the world's going to be probably next year. So there were big turnaround in markets, and this is coming through to the JSE as well. We saw miners better today. There's a lot of mixed performances in banks and in some of the consumer stocks, but I think we'll work through that. I still think it's going to be a good run into the end of the year.
Let's hope so indeed. Speaking of, let's get into some company updates, and let's start with Vodacom. I got to speak with the CEO a little bit earlier on today, and despite what we saw in terms of operating profits, optimistic about the business in Egypt, optimistic about Safaricom in Ethiopia, and also at the business in South Africa, despite the headwinds that I mentioned earlier. What did you make of those interims?
It's a tough business.
Yeah.
It's a really tough business. I think you can hear how much they have to spend to get you to use their services. And, you know, to a large extent, you want their services for nothing. You don't want to pay for data. So it's become a very difficult situation for, you know, for the mobile operators. And we see this globally. I think fintech hasn't quite worked. Or when I say worked, it hasn't reached the levels that we thought it would, and some of the streaming issues. So for me, it's gone ex-growth. I think you buy Vodacom now for the returns you're going to make, dividend yields and that, which is not really an exciting prospect. Nothing against management. Can't criticize management for trying and that, but it's a difficult area. And we're seeing the problems that competitors MTN are having as well, although a lot of them are political from up north in Nigeria. But still not... Yeah, if you've had the shares for 4 or 5 years, you haven't made any money.
Yeah, no, absolutely. Would you be making money off of Shoprite? If that's a trick question, of course you'd be. Despite that AGM today indicating some of the challenges that they've had, much like many of the other retailers, and then also just indicating the outlook there. Shoprite, all in all, I suppose, is a good business at the core.
Well, it's well run.
Yeah.
Full stop. And in very difficult circumstances, which, as you say, they've highlighted, but yet they keep stealing market share. And, you know, it's hard to steal market share because you're attracting people to come to your shops and to use your services. And in order to do that, you have to have a very high quality of offering. And they've managed to do that, and they continue to do it. So it's very hard for competition to catch up. Woolworths are giving it a good go and are still up there, but, you know, Pick n Pay have got a lot of ground to cover up, and Spar as well. So I think Shoprite is just, you know, super business, as we've seen in their quarterly update today.
And very briefly, if you will, David, a Premier Group, they are a food producer. Their costs and the inflationary pressures obviously ultimately going to fall onto the consumer.
Yeah. It's, you know, Premier's only just come to the market, even though we know it from history, but it was a private company for many years, and that it was hard to go through the numbers because there's a lot of, when they came onto the market, there were a lot of, you know, the comparatives don't give you a good feel for the business. It's you know, as we've seen with food producers, it's the increasing costs and the difficulties that they have keeping manufacturing costs against all the issues that you've identified, you know, play on margins. But look, it was a commendable result. Markets still indifferent to it. But I think that we're going to see all the food manufacturers improving off what has been a very tough base. So, yeah, but I've got to go through those numbers in a lot more detail, especially the comparatives.
No, absolutely, David. Let's hope that it improves for the producers, because as consumers, we are desperate for some form of reprieve. As always, David Shapiro, thank you very much for joining us this afternoon. That is Sasfin Securities' David Shapiro joining us. And that's all.